In this video, we're going to look at how we record non-cash drawings for Year 12 accounting. So here's an example of a case study that has some non-cash drawings. So you can see that Eloise is the owner of a business called Hainsey's Hats, which sells exclusive baseball caps and snapbacks for sporting teams all around the world. On April 13, they had to close their shops for 3 months due to COVID-19. Eloise decided to take home some office furniture, so she took home some desks and chairs worth $1,200 so she could set up an awesome computer gaming space in her spare room. And she's written Memo 13 to verify this. So how would we record this? Well, we know that the transaction occurs on April 13, and because the office furniture is going from the business and being taken out and given to the owner, that means that our office furniture is going to be decreasing. So our office furniture account as an asset decreasing is going to be credited $1,200. Now the other account that's going to be affected is of course with the owner, and so when the owner takes something from the business, we know that that causes drawings. So this isn't drawings of cash, this is drawings of office furniture. So drawings as a negative owner's equity, when that goes up, that is going to be debited $1,200. So once again, we write a memo to explain what's happening. So we can simply say owner withdrew office furniture for personal use, and of course we put our source document, what's verifying that transaction, Memo 13. So that is for our general journal. Now if we have a look at our general ledger, we need to transfer this information over into those ledger accounts. So in the office furniture account on April 13, there would be a transaction where we would credit it $1,200, and that cross-reference would be to the drawings account. In the drawings account on April 13, there would be $1,200 showing the increase in drawings, and the cross-reference is showing where its friend is. And that's going to be office furniture. So a fairly straightforward recording in our general ledger there. So the last part is looking at what is the effect on the accounting equation when we take non-cash drawings. So we go back up to our general journal and we have a look at the kinds of accounts that are affected. So we can see office furniture is an asset, and drawings, we said before, is a negative owner's equity. So that means straight away I can see that there's going to be no effect on liabilities. So I write no effect and I put a dash, or I can simply say 0 in the amount column. Office furniture is going down, so we know that that is going to be an overall decrease of assets, and that's going to be of $1,200. Now, in order to get this accounting equation to balance, I know that that means I also have to have either an increase in assets, which I don't, or a decrease in owner's equity. So if we think about what happens when drawings goes up, the amount we're taking out of the business goes up, the total amount that the business owes the owner will actually go down. So that's why owner's equity is decreasing there. So we can see that I've got a decrease. If I go back to my accounting equation, I've got a decrease in assets of $1,200. I've got no change to liabilities, and I've got a decrease of owner's equity. My accounting equation balances, and I know that I've got this correct.